Hello, everyone. Welcome. Welcome, guys. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. Welcome, everyone. We'll get started shortly. Welcome, everyone. Welcome. Guys, we'll get started shortly. Welcome, everyone. Welcome. So a beginner's class. Welcome, everyone. We'll get started shortly. All right. Welcome, everyone. Welcome, guys. Hey, Tylak. Welcome, Tylak. Hey, Kawisi. Welcome. Hey, Cindy. Welcome, Cindy.
Hey, David.
Hey, Solomon. Welcome. Hey, guys. Welcome, everyone. Welcome. As you guys know, this is our beginners class. All right. And I want to, you guys know about this, but I always like to mention this, all right, especially for our new traders that are here. All right, you guys should see my screen, Trading in the Zone. All right, so we highly recommend new traders get this book. All right, Trading in the Zone by Mark Douglas. How to master the market with confidence, discipline, and a winning attitude. All right. So those of you who do not have this book, highly recommend it. Right. We offer this book free to our coaching students that do our one-on-one coaching with me. All right. You get this book free. Also, it's on YouTube. So if you do a search on YouTube, all right, for Trading in the Zone, it will come up. It's free. You can start listening to it. All right. This tonight, after this class, as a matter of fact, right? So Trading in the Zone, right? Master the markets with confidence, discipline, and a winning attitude. All right. So highly recommend it to new traders. Most of our traders have that book. All right. I'm going to open up this evening by asking anything in particular you guys want to touch on this evening. Anything you want to talk about, learn about this evening? Anything in particular? Anyone? Anything in particular? All right. All right. There's some things I want to go over. I want to go over some of the moves in the markets, all right, that happened today. And I want to go over this, right? We're going to go over this first, the 4 market phases, and then we'll go over what happened in the market today. Did anyone go short? Tyler, did you go short at all? Did you short anything today or yesterday?
I didn't get to it quick enough, David. I was a day late, $1 short. So, I mean, no pun intended, but yeah. No,
Go ahead.
No, I was going to say I didn't get to it in time, unfortunately.
Oh, okay, that's fine. It was a quick move in the yen pairs.
That's what I saw. When I saw your alert, and I appreciate that. Thank you so much. But by the time I got it and I went to my computer, then you know what? I kind of missed the boat.
Yeah. But there are moves setting up in the other period. So yeah,
I saw that. I'm looking forward to it.
Yeah. All right. So let's go over this. All right. Let's do this. We'll start with. Yeah, we went through some of this last night, but I want to go over it more. And Cindy, you here? Thanks for coming.
Thanks for having me, David.
Very good. Welcome. All right. So all right. As new traders, this is perhaps the number one question that we get from new traders. All right. And even seasoned traders that are still trying to figure things out, right? Where do we enter and where do we exit? All right. Where do we enter and then where do we exit the trade? Number one question that I get. All right. And it's the most frustrating thing for traders to figure out, right? How do I enter the trade? When do I enter the trade? All right. And we talked about this last night, but this is critical. And I want to go over this because of what we saw in the markets today. All right. And we talked about you guys, those of you who are with us, you guys remember the yen rotation, right? You guys remember the yen rotation? The yen rotation we had, was it last week? Right. And that lasted what? About 24 hours, right? And we were out of that rotation because the price broke support. All right. And guess what? If we hadn't gotten out of that rotation, right, it fell a lot, right, Tyler? They fell quite a bit, right? So if we had stayed in that rotation, would not have been good. All right. So gonna go through why we need to follow these rules here. All right. All right. So keep in mind all your decisions, all your buying and selling decisions will happen here. Right? At resistance and at support. Nowhere else. All right. All your buying and selling decisions will happen here at resistance and here at support. All right. So support and resistance, the keys to your success. And it is absolutely. All right. So resistance is made. Resistance is made when price doesn't move any higher, can't move any higher. All right. Who here knows about resistance? Who here knows about, have heard about resistance? So Solomon, I'm gonna pick on you. All right. What did you know about before coming here? What had you learned about support and resistance? Or did you know anything about support and resistance?
Hi, Mr. David. Good evening.
Hello.
Yes, sir. So, you asked me out, do you, if I had any idea about support and resistance,
Yes.
right? I have no idea until you talked
Until
about support. Yeah,
you
until
came
you
here.
explained it. Yes, sir.
Okay. All right. Thanks. Guys, that's most traders, right? Most traders are not aware of this. And this is perhaps the most important thing we need to do in trading. So much so that every single system that we have built-in support and resistance on our charts. All right. Most trading systems don't have that. And this, I believe, is the most critical tool that you have. All right. So the way it works is like this. All right. Price isn't random. All right. Random meaning it just goes like this, right? There is a method to the madness. All right. And understand that there are traders. Whenever you take a trade, there are traders that are trading with you and against you. All right. So there's a battle between buyers and sellers. All right. So think about resistance is a high, price made a high. So let's say it went from $10 here, all right, to let's say $50 here. All right. So $10 here to $50 here. So it made a high to $50. All right. And then perhaps it retraced. All right. But we need the price to get to that $50 mark here a second time. All right, to form resistance. So think of resistance as your ceiling. All right, so where we are right now at your home, right? Your ceiling, that's resistance. And the price can't go any higher than that ceiling. All right, but we need resistance to form. We need two touches at that same level, that $50 mark, to have resistance. Understand, the more touches we have, the stronger the resistance, the stronger your ceiling. All right. So minimum of we need minimum of two touches. The more touches, stronger the resistance. And keep in mind, buyers are here at resistance and sellers are here also at resistance. The buyers are looking to push the price higher and the sellers are looking to push the price lower at resistance. All right. Same thing here. At your $10 mark here at support, there are buyers that are sitting here and sellers that are sitting here. And traders, these are traders, and traders are watching these levels. They're watching support level at $10 and they're watching resistance level at $50. All right. The buyers are looking to push the price higher back to resistance here. And the same thing, right? One price to $10, one move to $10, that's just a low. Right? We don't have support. That's just the low of the price. We need minimum of two touches. The more touches we have, the stronger the support. So think of your support as your floor, right? As your floor. This is critical. This is critical. Most traders trade here between support and resistance. So they'll buy here, sell here, buy here, sell here, buy here, sell here, right? Understand that this is not tradable, right? Trading within support and resistance is not tradable. And most traders, hey Ranjit, welcome. this is what you'll see out there, right? Most traders are trying to trade between here. They'll buy here, sell here, buy here, sell here, buy here, sell here. All right. So understand that's not tradable. All right. How do we trade? When do we enter the trade? Number one question I always get from traders: when do we enter? We enter when the price breaks resistance. All right. So look here. So here's our $50 price, our $10 price. We understand that within here, we have there's a battle between buyers and sellers. All right. The buyers win. Hey, Arthur, welcome. The buyers, right, will win when the price breaks through resistance, breaks through that wall. Right. Remember, buyers are sitting here at resistance and sellers are sitting here. We've got to wait patiently, all right, for the buyers to come in, break resistance, and then we would buy here. All right. If we're shorting, if we're taking the price down, we're shorting, we would need to wait for the short sellers or the shorts to break support, all right, at that $10 mark, below that $10 mark, and then we would short it to go lower. All right, that makes sense so far? Makes sense? Yes, no? Make sense? Yes or no? Or do I need to stop here or continue? Arthur, does this make sense?
Yeah. Sorry, I joined a little late, but yeah,
Oh.
not, you know.
Okay, Cindy, does this make sense?
Yeah, so you're basically saying, don't move until it ticks a little bit up, or I should say, ticks a little bit down, because you want to buy low. You want to enter in when it goes off the trend a little bit.
Okay.
Does that make sense?
So don't move. You're absolutely right. So don't move until the price breaks resistance.
Right.
So whatever we do not move. Okay, we do not buy until the price breaks resistance. And I'm glad you said that. Don't move, because as traders we get really excited, right? And we want to move right away. So we don't move. We wait. We wait. We wait. We wait. We wait patiently. All right, until the price breaks resistance. And we need the price to break resistance. And what does that tell us when the price breaks resistance? What does that tell us?
Buyers are coming in.
The buyers are coming in. The buyers are coming in. So when we look at price, very good, Solomon. When we look at price and trading, understand that these price action here, those are individuals. Those are individuals just like us. All right. All right. And there's always someone else on the other side of the trade. So there are buyers here and sellers here. So we need more buyers. We need more demand. We need more buyers, right? Entering the market to give us confirmation that now it's okay to buy. All right. If the price doesn't break resistance, right? And now it's gone from $50 to now, let's say $55, right? There's no demand, right? If it stays below $50, let's say this is $50 and here is $48, right? And it stays in here, let's say $46, there's no demand. We shouldn't buy. We need to be certain that there's demand, there's more demand, there's more buyers than sellers. And we'll know that when the price breaks resistance. Okay, now, same thing for support. If the price breaks support, we know that there are more sellers than buyers. So there are more individuals just like us that are selling, they're getting out. All right. And we don't need to know why they're getting out. We don't need to know why they're selling. We just need to sell, right? We just need to get out, right? Because now there are more sellers than buyers. So we're going to always buy on a break of resistance and we sell on a break of support. Okay. So write this down. If you guys don't have this memory, right, write it down. We're always going to buy on a break of resistance. All right. Sell on a break of support. Buy on a break of resistance. And I know we always talk about this, but we need to drill that in. All right. Buy on a break of resistance because the buyers are buying. Sell on a break of support because the sellers are selling, they're getting out. All right. All right. So any questions on this before we move forward? And I want to show you guys why this is critical, especially with what happened today. All right. Why this is very, very critical. It's critical every day, but really when price moves. All right. Okay. So we're going to move forward.
Mr. David, quick question. Yes, sir.
Yes.
Yes, sir. So when we buy at the break of support, when we do shorts and at the, when we sell at the break of support, at what point do we quit shorting, in the trade? Is it when it hits another support on the lower side, or like at what point do you want to get out of shorting when it breaks support? You know what I mean? If you see a trade and you're gonna go short.
Okay, so at what point do you short it, or at what point do you exit on a short?
Yeah. At what point do you exit for the short?
Okay, so
because it did break support.
Okay, so if it breaks support and you go short, right? You will exit on when the price breaks resistance.
Okay.
Okay. And we'll look at some examples. So so it's the reverse. It's the reverse. Okay. So let's see here. So when we go long, we're looking for a buy, a break of resistance to buy, to go long. Hold on. Okay. So when we go long, break of resistance, all right, break of resistance to go long. All right. If the price breaks support, we would exit here, right? Exit here. Now we could go short, right? So we could go short here. All right. And that's the markdown phase. However, now if the price, I'll show, hold on. All right. So you guys have seen this, the 4 market phases, right? So Solomon, here would be your short trade. So let's say you went short here in the markdown phase, right? Let's say you went short here. You would close the trade here, right here, when the price breaks resistance. All right. So you see that?
Okay, sir. Yes, sir.
So when we go long, we would buy on a break of resistance, sell on a break of support. Enter here, sell here. If we go short, we're going to go short on a break of support and exit on a break of resistance. That makes sense?
Very much more. Yeah, with the graph.
All right. That makes sense, everyone?
Yes.
But- Yeah. So we had some shorts today, and I think you guys are ready for shorts. So going into 2023, right? We'll do more shorts. All right. We'll do more shorts. All right. New traders coming in. I know it's sometimes it's difficult to get this, but we're gonna push you guys next year, right? To get this. We'll do more shorts. And I this what happened today was a good example of why we want to learn how to go short. Okay, so it's the reverse.
Is that the same as buying put options?
Yes, so you could do puts also. You could buy puts to take advantage of the short move. All right. Now, very good. Okay, so let's go through this, the 4 market phases, and then I want to spend some time on the trades. Okay, but I want to go through this quickly. The 4 market phases that every trader must know. If you guys don't have this, Cindy, do you have a copy of this?
Yeah, I took a picture of it. Thank you.
Took a picture of it. Very good. Okay, I always tell traders to print it out when you get a chance, laminate it, have it with you at all times. Okay, this is your roadmap. All right, this is your roadmap. Whenever you guys get, and I know sometimes, especially you have money at risk and you're trading and things get kind of fuzzy, go back to this, right? Go back to the basics, go back to this. This is your roadmap. Okay, so the 4 market phases that every trader must know. First phase is the accumulation phase. All right. Second phase, the markup phase. Third phase, distribution. Fourth phase, the markdown phase. All right, let me repeat. Accumulation, markup, distribution, markdown. All right, within the markup phase, you've got reaccumulation, and I'll explain this. And then within the markdown phase, you've got redistribution. There's only 4. There's only 4. Hey, Gerald, welcome. Only 4, guys. All right, but this is your roadmap. Everything that you trade, everything, I don't care what it is, futures, forex, equities, indexes, whatever, they follow these 4 phases. And your job, your goal is to figure out. So when you look at a price chart, all right, figure out where you are in the cycle. This is the cycle here, where your price, right, where your stock is within this cycle. If it's in the markdown phase, you know you should not be buying. All right. All right. All right. So accumulation. You will find accumulation at the bottom. Think of accumulation at price fell at the bottom. And this is the reason why it's called accumulation. This is where all the hedge funds, all the big institutions, hey, Carlos, this is where they're buying shares, they're building positions, right? They're hiding their positions so that we don't see what they're buying, right? So they're accumulating, gathering shares at a low price. All right. So let's say that $10 mark, here is that $50 mark here, and they're gathering, accumulating positions. All right. Once they're ready to push that price higher, right? When it breaks resistance, now that phase is called the markup phase. That's where we get excited. All right. Price breaks resistance, and they decide, understand, as retail traders, we cannot move the market, right? We don't have enough capital to move the market. So that's the big hedge funds, big institutions finally decide, hey, we're going to push, right, the price higher. Our job is to, right, is to wait patiently, right? Like Cindy said, don't move, wait, all right? And they'll let us know when the time is right, when the price breaks resistance, all right? That's the markup phase. All right. So this is where we buy only and only when the price breaks resistance. All right. At some point, the price, as you know, doesn't go up in a straight line, so it will settle down, take a break, a breather. All right. And if the price breaks resistance, like here, just know that's new buyers coming into the market. New buyers entering the market. All right. So this would be an opportunity to scale up, add more to our position. All right. That reaccumulation phase here. All right. What we don't want to do is enter here as our first trade. So if we miss the buy signal here, do not try to enter here on this break of resistance. All right. It's over. You've missed it here. You've missed the entry here, right? It's too late. I see traders try to buy here on this leg here, and guess what? It's not a good thing to do. You're gonna get in trouble there. All right. All right. So a reaccumulation. The final phase up here, right, in that markup phase is distribution, where the price doesn't go any higher. And we saw that in the equity markets just recently, right? We saw that in the equity markets just recently, where the price wouldn't go any higher. All right. Finally broke support. And then we got a sell signal here to now close the trade. All right. So we're always going to buy on a break of resistance, sell on a break of support. All right. Now that distribution phase is tricky. All right. That distribution phase is very tricky. And this is where traders will mess up. Because what happens is this, that distribution phase, if the price breaks resistance, like right here, that's no longer distribution. All right. What is it now? If the price breaks resistance here and keeps going higher, what's this phase now?
The next stop is for T-Gate as in Tango.
It's what is it?
Still commenting. It's gonna go off.
Yeah, it's the markup, right? I'm getting a lot of background noise, guys. It's the markup phase, right? Reaccumulation markup phase. Okay. The price has to break support for it to be now called distribution. If it breaks support, we are now in the markdown phase. All right, markdown phase. Just like reaccumulation, we've got redistribution. So if the price consolidates, breaks the support level right here, guess what? We've got new sellers entering the market, right? Pushing the price lower down to that markdown phase, that's redistribution. All right. And then it starts all over again with accumulation, all over again, right? Break of resistance. So we'll see this a lot. There's only 4 phases. Only 4 phases. All right. Any questions on this? Any questions on this? Any questions? Okay. Because I want to spend some time here.
How long are the cycles each usually?
Oh, good question. Very good question. So the cycles will vary, okay? But plan on about 3 times. You might get about three opportunities to buy. All right. And I'll show you guys here. All right. You might get 2 to 3 opportunities on the 240 on a daily time frame. If you're lucky, you might get 5 cycles, 5 or 6. Okay. Let me hold on. Okay. So this is a 240. So let's look at the cycles here with the markup phase. Okay, so we'll start here. let's do, I'm sorry. Hold on, guys. Hold on. I got off track here. I want to spend some time here. Who was in the yen pairs? Who traded the last rotation? Did anyone time like, did you trade? You didn't trade the yen rotation, did you? Collis, did you?
No, not the last one. The one that was really short in time span.
Yes,
That
yes.
Yeah, no, I didn't do that one.
Collis, did you trade the last yen rotation?
Wow, Dave, it's been a while. I haven't been in anything for a couple weeks,
Okay.
so I don't remember.
Okay,
I'd have to look
Gerald.
it up.
I know Gerald. Gerald, you traded the last rotation, right?
Yeah, the most recent one that did not go nowhere yet. We traded that.
Yes. Okay. All right. Okay. So let's talk about this. Which was the pair that you traded, Gerald? That you remember the yen pair that you traded, and we looked at
Yeah.
it, and you said that it got right near support, and we were looking to get a bit more out of that. You remember which pair that was?
I remember the pair you was talking about. I didn't trade that pair that you're talking about, but I do remember what you're talking about.
Was
I
it
just don't remember the
CAD?
pair.
Well, okay.
Might have
So
been CAD yen.
I think it might have been CAD yen.
Yeah,
Okay.
because it got out soon after 3 hours. Yeah, I think it may have been the CAD yen.
I think it was the
talking about.
Yeah, I think it was the CAD yen. All right. So I want to talk about this. We've got about 20 minutes, and I want to spend some time on this. Okay. This is why we need everything we just went through: support and resistance, the 4 market phases, your entry and your exits. This is why this is critical. Okay. And we can't mess around with this. Right? If you guys are going to trade, right? If you're going to trade, you can't mess around with your entries and your exits. Otherwise, you're in the wrong business. All right? Yeah, we can't mess around with this. We just got a rotation last week, and we gave a buy signal here. And we had the majority of the pairs, right? We had the majority of the yen pairs. I think 9 out of 11 pairs giving buy signals. All right. And that's pretty good confirmation, right? When we have almost 80 to 90% of the pairs giving buy signal, right? Moving up, trying to move up, get into that markup phase. And we haven't seen this happen in quite some time, where within a day, the rotation came to an end, an absolute end. All right. And then here is support right here. Here's our support line right here. So we bought here. This is a 4-hour time frame, 240-minute time frame. And within a day, within 24 hours, we got a big seller here, big red candle here. All right. Price broke. Actually, hit resistance, came up a bit, and give us a sell signal to get out. And I think we were all frustrated because we had been waiting for a rotation for quite a bit. All right. And this was an absolute, the setup was great. Right. If you looked at it, great markdown phase, right? We got a low price, right? We got that low price we wanted, right, Cindy? That low price, right? And guess what? Buyers came in, nice consolidation, nice accumulation. All right. Buy signal, and then sellers came in, and we had to close the trade. We just had to close, we had to get out. And it hurt, right? Because we had been waiting for this. not just the loss. And this is what's going to happen. You guys are going to think, okay, everything is set up just perfect. It must work out, right? And then the market does what it wants. Our job is to get out. On the first break of support, we have to get out, and we got out here. All right. Now, I'm sure when the price went like this, right, went back up, a little bit of buying came in, traders got excited, right? I sure did. Okay, we might get another buy signal, but guess what? We never got a buy signal. But look what happened to the price. This is where the price is now. Right? So we bought here, we got out here, and this is where the price is now. What would have happened had we not gotten out here? Well, certainly we would have been in the trade in here. And I remember we were talking, Gerald, and we were talking about there was probably about a 30 pip discrepancy. And I remember telling Gerald, well, Gerald, what if it goes much lower? Remember that, Gerald?
Yeah, we were talking about getting out at that exit signal, and which is good because I thought the other candle that was closer to the support should have got us out, but nonetheless, it was good that we got out of the trade. And then we also talked about the fourth candle was one of the ones that, because the three candles that was next to the buy signal did not go anywhere and went sideways, we was concerned about when to buy into this particular trade. And now that we, hindsight is 2020, Monday quarterbacking it, perhaps this is just a redistribution phase that we entered into, and we just didn't know it because of the way the 240 trades. But perhaps this is just a redistribution phase of the markdown phase, if we really look at it, Monday morning quarterbacking. But that's what the chart really shows right now. So.
Yeah, right. Yeah, a continuation of that redistribution phase, right? But what's the lesson here? Anyone? What's the lesson here? What's the lesson for us here? What's the lesson?
David.
Cut our losses short.
Yep.
Yeah, cut our losses short. Anything else?
Listen to David.
What else? What else? What else? What else? What else? Sellers are in control. The sellers are in control. The sellers are in control.
Why do they want to be in control? Don't they want the price to go up so they can sell it for more?
Repeat that.
Why are the sellers are selling? Why don't they just let the price go up so then they can sell a little bit while it's higher?
Okay.
So
Never
that
mind,
they-
never mind. I try to make a joke.
Okay.
So that they can buy low,
Well, okay, so let's define who these are. These sellers, who are these sellers? Are they actually selling? Why are they selling?
so that they can buy low and play it big.
You think that's what's happening here?
Yeah, the seller want to get out, protect their asset, and when they say the opportunity is there, so they want to sell it further down, bring the stock further down, which is below their sticker price, right? And they know the value of the company is more than the sticker price, so later on they can play on that, right? That's what I think. Like,
So do you guys think that this is happening because individuals are getting out because they want a lower price and that they're in control of the price action here? You think that these traders here are in control of this, and they're managing their trade so that they can get a better price down here somewhere?
I think it's the big institutions.
Okay, and the big institutions are doing what?
I think they're obviously in control of shifting the market the way that they want it to go.
Okay. All right. Understand. Okay, this markdown phase, that's fair. That there's no controlled selling here. That's panic. Okay. That markdown phase, guys, that's panic selling. Yes, they're short sellers, really good traders like us, right? We'll short it, but the majority of these are buyers that got stuck in the trade, and now they're just panicking as they're seeing their equity go lower, right? They're losing profits, and they're just panic selling. That's what causes this. That's why you guys will see this. You guys will see. That's why some of our really good traders love to short, because you'll see really big. You see this right here? See this big candle right here? See this big candle right here? That's panic selling. That's not control selling. Right? In the markup phase, you might have more controlled buying, but not in the markdown phase. It's pure panic. Right?
Yeah, that's why it drops faster than it rises, right?
Yes, that's why it dropped. Exactly, right? That's why it drops. Yeah.
Is that always the case, David?
What's that, Cindy?
Is that always the case?
That's always the case. Yes.
Okay.
That's always the case. Always. Because, the way we think as traders, and this is why we focus on long only until our traders get to the point where they can go short, because our mind, trying to make money short, it just doesn't compute, right? How do you make money shorting as something drops, right? So that's the majority of us. All right. So most of us do not, we do not short. We go long. All right. So whenever, this is why you have market crash, right? This is why markets crash, because of panic selling, not panic short. They don't short, right? Very few, even the hedge funds, right? There are very few hedge funds out there that specialize in shorting, right? Most of the firms out there is long only, buy and hold, buy and hold, buy and hold. All right. So here, look at this candle here. Look at that candle here. See that candle here? See that candle here? That's panic selling. Now, really good traders can take advantage of this. But what we don't want to do is we don't want to get caught up in this, right? Because if we don't get out on a break of support, this is what can happen. All right. That's why we always say, just get out. All right. When it breaks support, just get out, because it's panic. It's panic, a lot of panic, a lot of fear. All right. And what you have to do as a trader is just get out first, think later. It breaks support, get out first, think later.
Hey, there's an even worse looking price time frame on this particular chart, and that's the 30-minute time frame, David.
Okay.
If there was a trader that was on that 30-minute time frame on this CAD yen, you didn't have time. And I don't know if you want to show that or not, but there was no time. You got burned bad, because If you didn't catch that exit, because that was the same hour, same half hour of that big candle. So that's one of those indications where it can hurt you if you're not careful with your entries and getting out, because that's all in the same half hour
Yeah.
on that 30-minute candle.
And here, thanks, Gerald. Here was the buy signal here. See that? Buy signal here. Buyers are coming in, and Gerald is right. That 30-minute time frame, right? Broke support right here. Here's the sell signal to get out. And look what happened. All right. Look what happened. You can't manage selling. Now we could flip it, right? And we could short it. All right. But we long, right? We long. It breaks support. We just have to get out. And you just think later. Your goal, close the trade, get out, think about it later. Whatever you got to do, close that trade. Just close it. Forget about, forget about your P&L. Just forget about, and that's any market, not just forex, not just futures. It happens with stocks, right? Any market. All right. When it breaks support, right, we have to get out. All right. So we have to play defense. Defense. If you play a really good defense, right? And that's what it means to get out, close the trade when the price break support. That's your defense, right? And what we want to do is we want to play a really good defense so we can survive, right? Survive the next opportunity. And then we can put our offense to work. But defense first, right? This right here, like Gerald said, right? If you don't get out here, and this happened quick, this is a 30-minute time frame, right? It's hard to make up this loss here. And what most of us will do, and I've done it too, we've all done it, is we hope that it will get back over to here, and hopefully we can break even. And we just, at that point, we're just happy if we can break even, right? But what generally happens is that it goes back, tests the low, tests the support, redistribution, and breaks it again. And we don't want to play that game. So our first support is where we want to get out. Okay. So our buying, where we buy and then where we sell is critical. That's critical. And we want to be systematic in doing that. No emotions, right? Right? When it hits that support, we want to get out. All right? We want to get out. All right? Now, I wanted to go through those yen pairs to show you guys that the price, it moves quickly. It will move quickly. All right? And this is a good example, Gerald. Good example on how quickly things can move.
Yeah, but you know what else moves? You know the ticker COSM?
Okay, COSM. All
yeah,
right.
the range is ridiculous. It's I was just curious if you think it's a tradable stock.
Okay. All right. We'll end with this one here. Okay. Well, we know we have sell signals on the equity markets, right? We do have sell signals, but we'll analyze this. Let's analyze this.
Yeah, for like a day trade maybe.
Yeah, I mean, you could get a day trade out of it. What's the issue with this trade? What's the issue with this? Anyone?
The
What's the
range is
issue?
just so high the range is so
I'll tell you what.
It's very volatile.
It's very volatile,
yeah,
right?
that's the word. Yeah.
All right. It probably doesn't have a lot of volume. You know, when we look at stocks, we want 3 months of very solid volume, right? To know that the institutions are buying this. They're continuously shorting this. So this is like a pump and dump. All right. And the reason we know this is a pump and dump is by here. They push the price to the high and then they bring it back down. So they pump it up. All right. And it could be news that's pumping it up, but they're short sellers that are coming in to bring it all the way back down. So every time you guys see the price do this, that's a pump and dump right here. That's a pump and dump. That's a pump and dump right here. That's a pump and dump right here. Okay. Even right here. And there's a good chance that they will, as a matter of fact, they brought it down. See, it closed, they brought it up all the way to like 2021, similar to here. And now it's what it finished at about $8. That's a pump and dump, not tradable. Every time they pump it up, they bring it back down. Okay. And that's what's that, pharmaceutical? Healthcare? Yeah. Arthur, you keep looking at these not so good stocks. I'll put it that way.
I almost got in around $5 and then it went up around to $8 or $9.
Well, how are you? Where are you finding these stocks? Let me ask you, where are you finding these?
A mix of things. So the news and also the scanner. Scanner showed that this one it's very high volume trading.
Okay. Okay. So when you look at volume, move that volume back. Okay. So if you look at right, if you look at the daily volume, that's gonna mess you up. Okay. So if you look at daily volume, you'll get that spike, but you don't have you wanna see consistent volume where the institutions are building positions. All right. So if you look at even if you look at a 2 or 3 day volume or even a 1 week volume, that's not enough. But I can guarantee you this is about, or you're looking at what volume are you looking at? Are you looking at 1 day volume? What period of time? Yeah, you gotta get, yeah. If you're looking at that type of volume, you're gonna pick this up. You're gonna pick up stocks that are doing this. You don't want that. You don't want that. Even if it's day trading, even if you day trade this, that's still risky. You could find a stock. Let's say your stock that's in a markup phase, right? So let's say you find a stock that's in a nice markup phase, right? You could still day trade that, right? You can still day trade that. As a matter of fact, that's a better trade because you know it's in a nice markup phase, right? Institutions are holding it. All right. It's not gonna do this. I mean, look at this here. This is crazy. Right? This is crazy. And this is on a 240-minute time frame. It went up from what's that? $10 down here to $40. And it's that's nuts. All right, that's nuts. All right. So if you're going to scan for volume, do at least a 1 month average volume. All right, 1 month, 2 months. We do 3 months. We do 3 months. In our heat seeker, right? Our heat seeker, we do 3 months so that we don't have, we'll never have this. This will never show up in any of our heat seekers, because that's not, we can't trust this. We can't trust this. All right. All right. Makes sense. Arthur, you challenge me every single night. But that's how we learn. That's how we learn. That's how we learn. Okay, remember, buy on a break of resistance, and we want to sell on a break of support. Now, the cool thing is, because I know some of us did this, right? So some of us shorted, and there's some really good shorts. Really good shorts. Hold on, and we'll end with this. Some really good shorts right here. This was a good short. All right. That Aussie yen was a really good short here. I know it happened quickly here. CAD yen, right? Short here, another short here. All right. So we can get out, right? We can get out of that long and then go short, look for short opportunities. Okay. All right. All right. All right, guys. For the holidays, we will not have a class tomorrow and Thursday for the holidays. And Sunday is Christmas. So Monday, our next class will be on Monday. So I want to wish everyone a happy holidays, Merry Christmas, happy holidays. All right. Expect some crazy volatility during the holidays. It gets crazy. All right. It gets crazy with volatility. So just be careful trading. Just be careful trading. All right. All right, guys. I will see you on Monday. All right. Take care. All right. Bye-bye.
All right, thank you,
Happy
David.
holidays, everyone. Take care.
Happy holidays, guys. Take care.
Thank you. Bye-bye.